Hello, folks, and welcome back to another episode of the Daily Crypto Byte. Today is Monday, November 15th. Bit of a low volume weekend. That being said, there are some assets looking primed for some volatility this week. We'll talk about that in today's episode and a whole lot more. Hope you guys all had a great weekend. But before we dive into things, Doc, CJ, how are you gentlemen doing on this fine Monday morning?
Doing great. How about you, CJ?
You know me, can't complain. Really interesting stuff going on. Excited to break down all the recent Bitcoin price action, as well as Riot blockchain and a lot of other crypto stocks and altcoins that have been really performing well. So excited to get into that with you two gentlemen.
What's so surprising there, guys, is that Bitcoin's made a relatively pedestrian move in November. But look at Riot and Mara. I mean, those moves, not just double digits, but my gosh, Riot just on fire. Mara, same thing. Just, running to the upside. Riot blockchain right around the 45-ish level right now. They're buying the 50s at the end of this week. That's the biggest open interest. Mara, MARA, just seeing where it is now. How about that? That one had a big turnaround. Wow. Marathon dropping 6.7%. Didn't see that coming today. Proposed convertible notes offering. I guess that's it, huh? The convertible notes.
It's interesting, pretty much all of the Bitcoin-related mining stocks are flat or somewhat down, other than Riot. Perhaps that's because they have earnings later today. I'm not exactly sure when. I would assume potentially after the close, but I know they do or are scheduled to report today. So we'll definitely see what happens. Might get a nice move out of that one, but who knows?
Yeah, CJ, last week you did a really nice breakdown of these miners and kind of how to look at them, in terms of from a fundamental perspective. You did a breakdown of their hash power and, which miners are most profitable and which are not. You put forward that earnings perspective. Any idea why Riot would be, out earning other crypto miners and why other miners would be flat, whereas Riot is looking strong today?
Yeah, well, Riot is about second in terms of market cap to Mara. However, I think that with their developments and their strides to include more additional thousands of miners to their fleet, really it is a race, an arms race of hash power between the three big ones in my mind, which are Riot, Mara, and then Hut 8's coming in kind of as number 3. But essentially, whoever gets the most hash power first, even if it means taking on some debt in the interim, you're going to have the long-term, you're going to have as much time to push out those other miners if you control a large predominant majority of that hash power, say 5 or 6%, something like that. So it'll be interesting. Perhaps Riot has made some moves and in that department in terms of scaling up their fleet. I know we had some UOA come in with a bullish call spread on Friday with some Riot options. So maybe somebody knows something going into earnings, perhaps, maybe not. Nonetheless, Riot is scaling up their operations a lot, and they're trending as a result. So sticking with it. I like Riot and Mara. I think they're going to be strong trends if Bitcoin can continue to push up here. But
yeah, well, this will be interesting because this, in fact, you guys were on the call when we spoke with Alan Lane, the CEO of Silvergate. Silvergate Capital, of course, the biggest crypto bank right now. They're not just a crypto bank, of course. They're a regular bank, but the reason the stock is damn near tripled is that the more firms like ours that, with our crypto hedge fund, when people want to get money into a crypto hedge fund, generally that money will have to go through some sort of crypto friendly bank in order to get the money in so that it can be turned into digital assets. And Silvergate is at the forefront of that. Mr. Lane talked about that. And an awful lot of these companies, like Mara, like Riot, and like Hut, want to keep as much of that reward that they get for those mining rewards, for the work that they do, because it is a proof of work coin, the Bitcoins are, rather than proofs of stake. And wow, Mara, I'm reading right now, guys, this is going to be a $500 million convertible secured note. And they, of course, get an awful lot of coins to the extent that they want to hold those as long as possible, get as much value out of those coins. That's why they either go to a bank like Silvergate and say, you know what, we've got, whatever, $2 billion in Bitcoin on our balance sheet. We'd like to not sell it, but borrow against it. Or they have to do what Mara's doing now, and that is get a $500 million convertible note. And yes, that will dilute the stock because somebody has the ability, whoever buys that note, to convert and I don't have all the details in front of me right now, guys, but they also say they'll have the option to purchase an additional 75 million shares. So all of this is potentially dilutive, which explains, of course, why we're seeing Mara shares down, what did I say, 6% earlier? Right now, let me see, do I see the shares outstanding? I'll give you the shares outstanding in a second, guys. I should have had that up in front of me. But let's see, where is that? Shares outstanding, 100 million shares outstanding right now. So 100 million times where the stock's trading $70.75 or $71 gives you, of course, 7 billion in market cap. And they dropped that 6.5–7% today based on this convertible note offering.
Yeah, some big moves in the crypto-related equities. Those will definitely be some assets to watch this week. One thing that we brought up this weekend, CJ, was the fact that we've started to see the first signs of some of those long-term holders and whales that Jon was just talking about starting to distribute a little bit of their Bitcoin. And, I'm just curious to see, how has Bitcoin been holding up over the weekend, given the fact that we're starting to see some distribution? I know that was low. There was low volume over the weekend, but anything you're seeing here technically, CJ, that gets you excited for this week?
Yeah, and I hesitate to use the word distribution because we're so early on in it. It's a gradual process that can take months, a process that I don't think is going to be finished until at least January or potentially even February if we continue with that expanding cycle theory. But yeah, let's jump into some charts.
Just real quick, you said talking about that distribution cycle. If we just look back to what we saw from the time of November, when we started seeing whales distribute in 2020, we didn't really start to see them reaccumulate until about June or late May. So, that's a long window, about 7 months period of distribution. And during that time, the market was making new all-time highs. So although there is the beginning signs of distribution, like CJ said, it is a long process. And, the market tends to continue to make all-time highs during that distribution. So sorry for interrupting, CJ. Go ahead.
No, thanks for that clarification. Let's start off with something that everybody's been talking about, which is Plan B, the creator of the stock to flow model, or the first one, I think, to popularize applying the stock to flow model to Bitcoin's fundamental valuation. And so he's been pretty accurate in terms of his recent calls in September, October. And here he's calling for the end of November, Bitcoin price to be at 98K, and then potentially all out FOMO to 135K in December. That is his prediction. and he's sticking to it. Seems a little optimistic in my mind, but definitely I think we still have a lot to be bullish about in the overall trend. Going to Bitcoin's technicals, we have held this support channel. I'll make it a little bit more clear so you guys can see it. But this was key. We came up, we had that bullish engulfing candle, we back tested support, and then have actually been able to bounce really starting last night during the beginnings of the Asian work week. When that Asian session turned from Monday while it was still Sunday night for here for us in Chicago here. But more interestingly, I think we have a little bit of a cup and handle pattern going here now that we've formed support at about 63 to 64K. And, we remember our textbook cup and handle pattern. You have a little retrace from the previous double top, and then some bullish price action going much further beyond the brim. And we saw this pattern with Bitcoin back throughout basically its recent retrace. We had that same cup and handle. This is a pattern that a lot of bullish traders and Bitcoin traders specifically are very familiar with now, because not only is it played out in Bitcoin, but it's played out in a variety of altcoins all over the space again. So I think it's interesting that we're starting to see that right at the top of our current uptrend. It's not perfect, but the general premise is there. And I do expect us to break out here into the 70s in potentially the next couple weeks. The fact that we can consolidate above that previous resistance level, I think is very, very significant. And it really goes back to this schematic that we've been showing for quite a while, ever since last week. Bitcoin is here. It's holding that 63 level right now. And I think the longer we hold that, and the more accumulation we can see at this level, I think we're stacking the odds in our favor of potentially going higher. Now, to your point, Monty, about distribution and whales moving, we saw this earlier this morning, sent from a colleague of ours, but this is a comparison between 2017 and 2021 in terms of whale holders and transferring them, around the blockchain. And we can see a lot of whale price action, not price action, but a lot of whale transaction activity occurring before these peak parabolic trends. So it's interesting that we're seeing a similar level of whale activity prior to, this end of the cycle, where a lot of the fundamental analysts in the space are predicting, 98K, 135K within the next few months. So I think we're at a very exciting section of the cycle right now. And, if we look at Bitcoin, this is kind of like the other side of the equation. You have all of these transactions occurring by the whales, but where are the transactions actually going? I think they're going off of exchanges, clearly, because when we look at the Bitcoin price, ever since, our accumulation period in about May to August, ever since that time where we bottomed, whales, or just the market participants in general, have continuously moved their coins off of exchanges, and we have less Bitcoins to go around to provide liquidity on these spot exchanges. So something interesting, and something I think noteworthy there when you're trying to think about the supply and demand dynamics within the marketplace. But I'm pretty bullish, even though we are pulling down a little bit to start the day. But interested to hear what you gentlemen think as well.
Yeah, CJ, I think you did a great job there, kind of contextualizing where we're at in this market cycle. You talked about comparing that whale activity with 2017. I think that's a great comparison, but also that distribution thing we talked about. Lots of signs are pointing to the fact that this is really just the beginning of this bull cycle, and that this is where we really start to see that parabolic price action. But one thing I wanted to quickly just touch on, because I think it was pretty fitting with what you were talking about, CJ, is what we're seeing here with ETH's price action as well. Because I think, when you talk about that accumulation channel, I think we're seeing some very, very nice accumulation here for ETH. And what I want to point out is the supply absorption we've been seeing at this $4,500 level. ETH has been under some pretty heavy sell pressure for the last week or so here. after we made new all-time highs at about 48.50. Since then, the network has been highly congested. We talked last week about how gas fees were very high. We started to see those gas fees come down a little bit over the weekend as we had some low volume. But like I said, what I think is most noteworthy is typically during those periods of congestion, we see harder sell-offs. We see retests of that moving average. Here, what is a clear trending market, the trend more or less did not die. This level of 4,500 held up very strong. We had 3 consecutive wicks down to this level, all of which were relentlessly bought up. And I think that kind of validates that accumulation model that CJ was just talking about here. And I think bodes well for ETH's price action later this week. So, today it looks like we want to go a little bit higher here. So I'll be just waiting for some bullish confirmation here. I think that what we've seen over the past 4 days here for ETH and just this continual wicks down, supply absorptions at that level just tells us that $4,500 is a very strong level of support and perhaps that top channel of that accumulation range that CJ was pointing out for Bitcoin, but I think it holds up here for ETH as well too. So I think that, like CJ said, I'm bullish as well going forward here. The same or very similar supply and demand mechanics that are dictating Bitcoin price action are true for ETH now as well. We've seen ETH flowing off of exchanges. We've seen an increase in the amount of ETH staked as well. So all of those fundamental mechanics that I think are going to lead Bitcoin higher are looking equally positive for ETH. So should be a strong week of price action.
As you hear this all the time, people pushing back on inflation and so forth. I don't know what they're thinking, and I encourage them to push back because it's the dumbest pushback I can imagine. If you're not seeing inflation, you're not out shopping. And knock on wood, you guys, me, many of the people who are in the markets, it's an annoyance. But for people who are solidly middle class to less than middle class, it's not just an annoyance. Inflation is really painful. We had Stephanie Rule this weekend out saying, more or less the same sort of stupid things that Yellen and others have said about, it's a high class problem. It's not a high class problem. It's not a problem at all for the high class. It's a problem for all the folks who don't make a lot more than just what it takes to live every week, every month, between rent and all of a sudden your cost of fueling that vehicle goes up and doubles year over year. Now, granted, it didn't happen in the last 2 weeks, but it's been steadily going up over the past year. And now we're coming up on a place where people are really starting to feel it because even the administration is saying we can't keep up with it and we don't know anything that we can do to stop it. In fact, when they said that the thing to stop it would be more spending, I just wonder what in the hell they're thinking when they make those kinds of statements. But to get off that soapbox for a sec, people would have been buying gold 10 years ago with this kind of inflation, with 6+% inflation. They would have been buying gold. They're not. They're buying crypto. Look at gold. It's gone nowhere. And cryptos are on fire. Bitcoin, obviously, assets gather their value by their scarcity. Bitcoin getting that nice boost because it's a limited supply, increasing demand asset. Gold is not seeing that. So people ask me, well, does this explain, this person, Stephen Betzel, rhymes with pretzel, I guess, just sent me a tweet that says, does that explain why gold and the 10-year bond haven't budged? 10-year bond hasn't budged because the Fed is still buying $85 billion a month. So when they taper, that's not the same as jacking up rates, by the way, and they haven't started the taper yet. They're going to start in December. So 10-year bond, that might move gold. I don't think so. I think most of the people that used to chase gold have it. I'm one of those people that has gold, but I haven't bought any more gold since basically 2017 when I started getting into crypto. Crypto has performed as an inflation hedge like crazy versus gold that has done nothing. Pull up a 10-year on gold or a 5-year on gold, and you'll see what I'm talking about. It is not keeping up with inflation at all. So I guess people just continue to focus on the old stuff rather than what is actually in the market.
I want to keep you on this. I want to keep you on this tangent. Can I ask you, why do you think gold has not kept up as an inflation hedge? You want to take a stab at that?
I think the biggest reason, well, there's several reasons. Once you get crypto at all, once you understand sort of how it works and you don't fear the wallet or how you're going to store it, because that's quite frankly, I think what CJ and Monty, that's one of the strong points of these guys is that they can help people understand how to store their Bitcoin or other coins, tokens. I think that's a challenge for a lot of people, especially people my age and above. But the more people that understand how to do it, my God, gold, you got to have a safe. Either that or what are you doing? Digging a hole in your basement like John Wick and cementing it over, putting a box of gold down in the basement or something like that? No, you're probably putting it in a safe deposit box. You're putting it in a safe or whatever. Bitcoin is really easy to store. Bitcoin, once you understand a wallet, whether it's hardware, software, or whatever, cold wallet, hot wallet, it's really easy. So I think, CJ, to answer your question, one, it's storage. Gold costs you to store versus Bitcoin that doesn't. Two, Bitcoin gets out there and has been beating inflation in a big way. Gold has done nothing during this run. And I think all of the new money that is looking to either do an inflationary hedge or is just, not willing to pay to store gold isn't buying gold. All that new money. And, so let's say you have the same amount of old, whoever it would have been, who is it down in Texas? Oh, shoot, forget his name, but there's this really big group down in Texas that just buys gold all the time. I bet even they've slowed down on their purchase of gold. So I think gold just hasn't been performing, and that's why people have been leaving it, CJ.
Thank you for that, John. Appreciate the in-depth analysis and breakdown of BTC versus gold. Monty, any kind of closing thoughts here as we wrap it up today?
No, just thank you for that, John. CJ and I, we always talk about the supply and demand, mechanics of Bitcoin and kind of how they affect price, but we don't really talk about them in sort of the context of inflation and how they compare with gold. So it seems like the audience really enjoyed that today. So thank you for sharing that insight. But that is all we got for today. So thank you guys so much for watching. Should be a very interesting week. As always, CJ and myself will be hanging out in the crypto room all week. So if you guys are, done trading with crypto equities today at 3 and want to continue making some gains, stop by the crypto room. We'll be in there, hanging out. There's a community of traders from all around the world. And the chat is 24/7. We would love to have you in there. We publish actionable trade insights, news pieces. We have an extensive education curriculum. A new course was just added last week, and a whole lot more. So definitely head over there and check that out. And if you are looking for a place to trade your crypto, we recommend you check out the sponsor of this show, Invest Voyager, where you can trade 60+ digital assets, and you can earn up 12% interest on assets like DOT and up to 9% interest on stablecoins like USDC. So head over there and check them out. And if you do, use code REBEL25 for $25 free in crypto when you sign up. But that's all we got for today. CJ, John, have a great week. We will see you guys again tomorrow. Thanks so much for watching, and take care.
Bang.